In like B2B SaaS, the wisdom has always been you need to have that like 10x feature. What I found with LLMs, especially in copilots, is that there isn't really that need to migrate the system of record, right? They kind of much more naturally integrate into your inbox, into your workflow. You can get to like product market fit across a variety of use cases, even if none of them is 10x. We found it potentially really interesting.
My guest today is Kevin Novak, the founder and managing partner of Rackhouse Ventures, an early-stage venture firm focused on the intersection between AI and the real world. Kevin has had a long and respected career in data science and AI, serving as Uber's first head of data science and inventing Uber's dynamic pricing feature. Before Rackhouse, he was a chief data officer of Tala Financial, advised several business firms, and personally supported over 50 companies as an angel investor. Today, we discussed all things AI investing, from identifying when data and AI are core to a business model to distinguishing between wrappers and net new applications. We also talked about the common characteristics of industries most ripe for AI solutions. In addition, we explored how AI will shape the future of company formation and the venture capital industry itself. Kevin is a Silicon Valley insider when it comes to AI and data science, so our conversation offered many insights into what leading companies and investors think about AI. I hope that you enjoy it. Kevin, welcome to the show.
Thank you for having me. This is great.
Happy to have you here. Kevin, let's start with the origin of your career in tech. You joined Uber as the first data scientist. Tell us a bit of that story.
For sure. I came out of academia. I was a nuclear physicist by training, was working on a project that was funded through the Higgs boson research, which was really rewarding. And one of the unique ironies of academia is like when you achieve your big success, in our case, like the Higgs got discovered, you're rewarded with unemployment. Basically all the money dries up. And so half my lab went to Wall Street and the other half started looking out west. And I was kind of in that latter bucket. And I had a roommate who was working at this limo company with an app called Uber Cab. And he pinged me and he said, hey, you got to kind of go check this out. We have a bunch of math problems. So I applied at Uber Cab. I applied to a couple other places too, including Zynga. And Zynga rejected me in about 20 minutes. It was like literally immediate. And so I was like, well, like, let me go check out this limo thing. And so I came out and interviewed over one very long weekend and kind of fell in love with it. Yeah, everybody interviewed was smarter than me and I kind of got the business and it's a fun math problem. And so jumped in.
How do you think coming from academia prepared you or helped you in succeeding at Uber?
Well, I think it's interesting is, I mean, like anybody who's done academic research knows that like one of the survival skills you have to master is just the ability to like work and think really hard with very little external validation, right? You are like stuck in a lab grinding, right? And like the value structure is slightly different, the goal is different, but like mental toughness was undoubtedly part of it. And so I think like, you know, even as I was recruiting and sort of trying to figure out these skill sets, finding people with that kind of research training was really helpful. You know, because startups, especially, but when, you know, before it's obvious, kind of a very analogous, like you got to believe in it yourself.
What I'm excited about talking to you with you today is that you have that academic background, but you've also been very early to the world of AI and data from a practitioner. You've been on both sides of the aisle. What are your high level thoughts on what's happening, what we've been witnessing with, ChatGPT?
I was exposed to sort of big data in the earliest kind of, you know, Hadoop and H-based. I'm like dating myself a bit here in academia. And I spent about 10, almost 15 years as an operating data scientist, kind of in the startup scene. To me, you know, undeniably the last year, the rise of transformers, I would really sort of say transformers kind of crossing the chasm to like product market fit. As a practitioner has been really cool, right? Just like the amount of stuff that you've seen develop. As an investor, I think this is kind of one of those times where I think I've been a little bit more cautious in terms of, you know, I think where discipline is going to serve us well. I'm happy to talk more on it, but it's sort of been a very split brain. Like the data nerd in me is nerding out. The investor in me.
Okay, that's interesting. And we'll delve into that. And as you were referencing, you started Rackhouse, your firm, 4 or 5 years ago.
We started formally fundraising for it in the fall of 2020, closed our first fund like Q1 of 2021.
And what I've heard you talk about is that you come with an industry agnostic approach to AI, while most firms in the Valley were taking a more industry-focused approach, like we'll invest in AI within enterprise or within fintech, for instance.
I would say that traditionally speaking, over the last 20 years, like enterprise technology, fintech, healthcare have really been the dominant sectors in sort of where you find data in AI companies. Part of what I developed conviction in as an operator, as an angel investor, kind of rolled forward into Rackhouse, was that there were going to be transformational opportunities, huge ones in basically every industry. Maybe a little bit more obvious than the last couple of years, but I was kind of feeling it early. And the other thing I was really convinced about as I got to work with investors is like the failure here is not really one of IQ points. Like most VCs are pretty smart, but VC funds are structured in a way that basically a set of promises they make to their investors, right? And they kind of have a kind of natural momentum to them. So my idea had been, if I recognized that there was sort of this rotation, this evolution coming in where data was coming, that the quickest way I could build a fund that would invest in it is kind of start fresh, right? And that's kind of where Rackhouse came from.
Now, ChatGPT, in a sense, validates your industry-agnostic approach.
Somewhat,
because it kickstarted a wave of experimentation with LLMs in everything.
Absolutely.
And I think what's curious is that we're using models to treat every problem like a nail, right? Like sometimes you see like LLMs and things like, I guess we actually don't need an LLM to solve this problem. I mean, it's very early to say which use cases will deliver huge amounts of value. I think we're seeing some early use cases. I think last week there was this news about, I think it was Klarna. I don't know if you read that that tweet using it for customer support, and which, I mean, I think is generating like $40 million.
It did 700 people's worth of work or something.
Exactly. So that was definitely impressive, but we're still early for sure in that wave. I guess in that context, how do you define whether AI or data is core to what a business does? Like when you're speaking to a founder, when you're evaluating a product, and has ChatGPT, in a sense, influenced or changed that?
Yeah, sure. I mean, so there's definitely been some influence for ChatGPT. Less on like what constitutes like an AI company. I mean, they're certainly brought a lot more thinkers into the field. Like there's been this kind of gravitational force, but I mean, we spend a lot of time thinking about what differentiates company, what are truly data-driven companies.
Yep.
And there are a couple of characteristics. I wouldn't necessarily say all need to be present, but like, it's more of a features you tend to look for. I mean, one of the things I spend a lot of time doing market research and customer research on is like developing what we call like the primary axis of how customers make decisions, the primary axis of decision making, in that lots of products, especially if you're going through like procurement, you're in like a large kind of legacy industry setting, you're going to have lots of vendors or lots of people who are sort of trying to solve this customer need. And one of the questions we're trying to answer is like, are these customers truly persuaded by like a marginal improvement in data execution or data quality, right? Or are other factors kind of driving more of the decision making, right? And so some of this is, I think, some of what we tend to look for are, or maybe avoid contrarian ways, or we avoid industries where they are data enabled or there's sort of data involved, but customers are making decisions based on hype or momentum, or maybe it's like procurement challenges. For example, Rackhouse hasn't done much defense tech, right?
Okay.
So, because one of our beliefs is, and there are a whole set of people, for example, who are building, AI for the government or some sort, AI for defense robotics. But I don't believe that the vendors which are winning procurement deals with the DoD are necessarily the biggest group of data nerds. You know what I mean? Like you're better knowing how to play that
distribution
game.
Than product.
Right, 100%. And so I think we've also kind of been a little bit contrarian on any trend that's data related that gets too popular. Like we didn't do much Web3. I actually don't really have a take on like pro con like Web3, but I did know that the factors that were driving like the token price were not better AI execution, right? I like working with companies where if we can develop a conviction that really is about like, we just need to execute on our vision, do that really well, and then the kind of market and the business comes to us. I like working with those businesses. I think it plays to my natural strengths. I think it's a much more straightforward sort of game plan. If it gets too complex of like, it's got to be AI plus marketing, plus you got to know somebody in the army, like not for me.
Have you seen, I guess, LLMs, transforms, ChatGPT, all this wave of new technology change the way in which some customers take those decisions? When you were talking about FOMO or who recommends this product? Like, has that, I guess, shifted or impacted the marketplace when you think about those,
I'd
those
say
type of customers?
in two ways. One of which is really positive and one of which is really problematic for founders, right? So in the positive sense, I think LLMs, transformers, that whole sort of wave has introduced the ability for like AI and data science to influence industries that have like traditionally not really benefited from a lot of modern technology. So, like if your job was sort of, you could be meaningfully improved through B2B SaaS, like sometime in the last 10 years, some founder kind of figured this out and probably shipped you a product. Think of all the early winners of like Harvey and Pika Labs. Like if you were a lawyer, you did not really benefit from the SaaS revolution over the last 15 years. Yeah. And so what I think is like transformers have introduced this like new form factor for how we're
like interaction between computers and humans.
You're either seeing it as like co-pilots or you're sort of delivering like the results of your, like AI is just like delivering you your bid package. One of our investments is in a company called XBuild that works with like blue collar building trades, right? And the idea is you can do a site inspection if you're a roofer, same as yours, take 15 photos, and then they will programmatically build your entire bid package. So it's like roofing without the paperwork, right?
Okay.
Those kind of value propositions like didn't really exist before transformers. So I think there's a real abundance narrative there, right? The challenging part has also been the hype has sort of created a need for customers to go and basically do something around AI. You see a lot of executives who are like taking sales meetings and basically they're just doing like a form of like performative market research of like, I'm going to meet with a founder so I can tell my boss I talked with a bunch of AI companies, even though my willingness to buy or even my ability to like understand the problem is low. So we're seeing like conversion from like first meeting to like pilot, to close deal.
Yeah,
it's sort of
like more really meetings, lagging, but less conversion.
Yeah, exactly.
That's
exactly.
Like much more noise in the customer discovery process for founders.
And I think it's, there's certainly people who are consciously wasting time, but I think there's just also, it's just a reaction to the amount of noise going on.
Yeah. You mentioned a second characteristic about the companies.
Yeah, the other thing that I really have found fascinating, especially with co-pilots, is you've sort of seen in like B2B SaaS, the wisdom has always been you need to have that like 10x feature, right? You got to have that one thing which is like 10x better than everything else. And a real common kind of anti-pattern was founders who would kind of find like 2 or 3 medium value features and kind of try to stack it up. I always have this idea of like 3 kids in a trench coat trying to pretend they're an adult kind of thing. There are real drawbacks to kind of the B2B SaaS, that like single pane of glass, as far as like you've got to like move your entire workflow to the vendor's pane of glass. So the idea had always been have that killer feature which kind of overcomes the pain of switching and the pain of moving your system of record. What I found with LLMs, especially in co-pilots, is that there isn't really that need to migrate the system of record, right? They kind of much more naturally integrate into your inbox, into your workflow. Like they can just work off of like your G Drive or Dropbox or whatever. And so the wisdom or the need for a founder to necessarily create that 10x feature is kind of going away, right? You really can start to say like, look, can I create this sort of like broad basket? I mean, like you have to be providing value, right? But if you think about like GitHub Copilot, any one of those features, they're all valuable, but is any one of them like 10x better than the incumbents of like you had linters and you've got some programmatic design. The real thing that's driving all of this is like, it's all in one seamless UX that you can kind of seamlessly context switch around. I think that that's kind of underappreciated. It's one of the things, like as we think about other sort of co-pilots, you can get to like product market fit across a variety of use cases, even if none of them is 10x, we found it potentially really interesting.
That means you don't necessarily need to replace the incumbent, but find ways to work within their boundaries.
This is a little early, but one of my sort of longer term theses is like the idea of like the proprietary system of record is going to go away, right? This idea of...
Which was one of the big adamants around like modes and defensibility.
Right, exactly. It's not there yet. You've seen some compelling projects. I would say, within a couple years, you're going to have the ability to basically pipe information from any origin to any destination pretty quickly, right? And I think that's kind of underappreciated from think of the sheer number of businesses that exist just because they've like got a death grip on like on their database, right? Right. And I think what we've shown in like the early stages of these co-pilots is they're pretty system of record agnostic. They can work with information wherever it kind of organically wants to live. And you couple that with like AI accelerated kind of ETL and pipelining. And I think this idea of, we can be a lot less opinionated about where stuff lives. And for me as a user, that means I don't need to port into anything. I can just sort of like work with whatever I bring to the table. Really excited to see where it goes for integrations. That's
fascinating. So does that directionally mean that eventually the system of record mode will no longer be as strong?
So as somebody who philosophically like really dislikes systems of like these sort of data modes, I think that we are fundamentally poorer off, like we are fundamentally worse off like as a group. I hope so. I think it's early innings, but I think this idea of being like, you will never get, like you won't port your information out because it's too difficult. Like the idea of like, we're just going to like make it annoying to pull out the information.
It's like another version of being on-prem.
Right. But like AI is infinitely patient, right? There doesn't exist a degree of difficulty that like ChatGPT will not grind its way through given sufficient prompting, right? I think that calculus is going to change pretty quick.
That's super interesting. So it feels like there's this phrase from Angela Strange of A16 that every company will be a fintech company, but that moment for AI, in a sense. Have you noticed any common characteristics among the industries or data problems where you see that AI can have much more impact?
Yeah. So one is definitely like if your dominant mode of kind of interacting with technology is not through a laptop screen, right? Like that.
Okay.
And so I think right now we're kind of in this like quirky phase where
like the blue collar company.
Yeah, but I'm also thinking, I mean, like I've seen like, like remote healthcare workers or, where people are like kind of working on their phones, even like things like an Amazon driver, right? Like we're in this weird, like sort of semi-evolved state where we have chatbots and sort of Q&A, which exists kind of through like the ChatGPT type prompts. And voice is a thing of like these models are now being like, they can speak to you. You can kind of speak to them. I think one of the this isn't all that controversial. I know there's lots of stuff under development, but this idea of just going like voice native as far as interacting with AI, like just talk to a computer like you would a human being, or be educated, or, like you can imagine like people having like radios or something like that where computers are talking to them. I think all of that's really compelling. I think a lot of those industries, if you have like not been tied to a laptop, you're still kind of living in the early 2000s. And what that looks like when you get like 20 years of like the modern data stack and all that sort of accoutrement, like layered in with like one product breakthrough. Right. I think that's big enterprise value being created in general. I think as an investor, that makes me interested.
That's super interesting. Like, well, can you give a few examples of industries where you're seeing that, like in your deal flow, in your own investments?
This isn't necessarily a generative AI component, but I did this investment as an angel and have participated as well through Rackhouse in a company called Scoot Science, and they are an oceanographic data company. So the Scoot in it is the Santa Cruz Ocean Observability team. Okay. And so they are a team that was really good at developing like oceanographic data models, right? Oceanographic data is like volumetric time series current data, right? Like they've got like salinity and temperature. This is like not stuff you can like assess in an Excel workbook.
Yeah.
And so as a result, like because this information was hard to analyze, it's like basically they didn't do any forecasting, like, and so we got connected very early on in their formation process. And they figured out pretty quickly that, especially if you can find these kind of 1 square mile of ocean use cases, that they could work with fish farms, right? And so the idea of like, if you are a fish farm in like British Columbia or, if they work on both sides of Canada, a couple other parts of the world, they can use their data model with like pretty much off the shelf ocean forecasting models and basically give you what they call like your underwater weather forecast. Like what will the ocean do in your fjord for the next 10 days? And if you've ever owned a fish as a pet, you will know that fish are very sensitive creatures. They die easily, right? Okay. The water is too hot, the water is too cold, too oxygenated, not oxygen enough, fish die, right? Same thing is true of farmed fish. And so these fish farms have pretty sizable loss rates, right? That you just end up saying the cost of doing business, the saying goes, you're not a fish farmer until you've killed 1 million fish.
Wow.
Yeah, I didn't know this either until I got involved with it. And so what you can do with this sort of Scoot product is you get this forecast, and then there are like operational levers you can pull. For example, if the water's gonna be too hot, you can like push the fish to deeper water, et cetera. And so they rolled out this product to their first sort of beta testing customers and used it for a growing season of just, here's your forecast, do what you're gonna do with it. And they increased the yield at these sites by like over 20%, which is basically like linear to revenue, right? It's just like 20% fewer fish, 20% more fish in market, right? And like that to me of like, if a founder is like, look, I can increase my customer's bottom line by 20% with a beta product, like huge. You don't see those kind of gains anywhere in enterprise. I think that those kind of 20% opportunities are all over. Like if you know where to look and you know how to kind of problem solve.
That's fascinating. And speaking of other type of use cases, I think it's astonishing the amount of number of companies we're seeing, and especially this concept around wrappers, right? Like there's a lot of companies, I mean, just building, I guess, very slight front ends on top of OpenAI APIs and across categories. I know customer support, sales, education are the ones where we're seeing like not tens, but hundreds of company coming up. Is there a distinction or set of questions you ask to determine whether a company is building a wrapper versus actually like a net new application, like what you just described?
I think it's usually pretty apparent from the product. If you kind of stay on top of like what these LLMs offer. And I think that just requires, like a reasonably good newsletter sort of subscription service. I mean, the thing that always comes to mind when I think about like wrappers versus truly distinct models, I think it's Justin Collins. He had this like quote of like, first time founders worry about product, second time founders worry about distribution, right? And to me, I think that classic application strategy of, let me find like a really sticky user or find a user, own that relationship, solve their problems well enough that they become sticky, I think is really the secret here. As far as OpenAI has sort of shown a pattern of innovation, they've shown a willingness to kind of start to break off adjacent, technologies. I think trying to build adjacent to OpenAI and like hope that they don't kind of come for your value proposition is kind of foolish. I think to the extent that these applications are going to be valuable and sort of long-lived, it really does come down to own your distribution. Know who your customer is, obsess about them, kind of think through what that sticky revenue looks like. And I think if you start from that lens, you'll discover that maybe even your initial product will start as like your own bespoke sort of custom model. And maybe over time, these LM providers are kind of hollowing it out from underneath. But as you solve the next problem and the next problem and the next problem, you're going to start to find these really kind of bespoke models. So I think every great application company, if you play this out like 5 or 6 years from now, is going to be some set of their feature set will just be basic wrappers. And a bunch of the other ones are going to be kind of intermediate models where the level of product build is going to be pretty non-uniform. It's going to be kind of all over the place. But what's going to all tie it together is, they are going back to that Copilot thing. They've solved like every use case for their customer to the point that customer couldn't imagine going anywhere else. Like that, I think that's how you build a durable LLM application company. Like debating about whether or not there's going to be a wrapper over the long run, I don't think that's the most important thing.
When you say it's obvious when you see the product, do you feel, I guess, an edge as a very technical, in-depth investor in this space compared to other investors?
Yeah, it's hard to say because I've never really worked at a bunch of other funds. I will say for me, looking at new businesses, talking to founders, asking them how the product works, and just kind of asking a couple follow-ups. Like I will tell you, most founders when they come to Rackhouse are like, wow, this is like weirdly technical for like a first call kind of thing. But for me, like one, I enjoy it. I spent like 10 years building this stuff. I'm unabashedly a data nerd. But two, I think that the quickest way you can figure out if a founder is either lying to you or more commonly lying to themselves
is talking about the product.
It's all about the product, right?
Yeah.
What are you predicting? Is this actually like achievable to predict with the amount of information that you can reasonably like bring to bear on that? All of these kind of things I'd like to hope I've developed a reasonably good intuition for over the years. And I would say most of these early companies certainly don't fail quickly for some like subtle, non-obvious thing. It's like the really avoidable, just sort of like, oh, I accidentally punched myself in the face type errors that I'm hoping early diligence on technology can help us kind of avoid as a fund. And if I point this out to founders, hopefully, maybe they'll come around and appreciate, that we help them sort of spot this issue. I would hesitate to sort of speak in general, but for Rackhouse, we take a lot of pride in kind of getting to technology diligence quickly.
Speaking of predictions, as you mentioned, I'd love to come back to talking a bit more about industries. And there's this, I guess, conclusion that the potential for automation is correlated to the availability of data.
Yeah.
Funny enough, you work at Tala Financial that offer microfinance to people in emerging markets who didn't have a credit identity or credit data. So I guess, how do you think about data problems or opportunities, markets, where the primary challenge is actually the absence of data?
I think one of the really like cool and awesome things about Tala specifically was that you kind of started from this fundamental premise of like the world is far more creditworthy, than like traditional finance is kind of willing to give it credit for. And they were able to kind of develop this product offering where they were able to pull behavioral data and a couple other kind of alternative sources of information. And we were able to, this is the royal, we had my team and a whole bunch of people at Tala were able to achieve like very good sort of predictive rates using these sort of alternative sources of information to do something as like meaningful as like help people get to like financial stability, right? Financial viability kind of thing. So I think that those opportunities definitely exist but to me, Tala was like coming out of the reality of like the world moving on to smartphones. And there was a bunch of information that machines could not necessarily access before that now they sort of, you went from like offline to online kind of rotation. That still exists. You see companies, especially in like computer vision, where you're seeing like models that can predict unsafe workplace habits, like OSHA violations, just like through security cameras or shoplifting, theft deterrent. So some of that exists. I think we're kind of late into that journey.
Does that mean there's basically during these last, one couple decades with introduction of new hardware that captures data like a cell phone, like a smartphone, like a camera, we have a whole new set of data sources
100%.
That were not used.
Yeah. I mean,
you feel like we're still early in actually leveraging those alternative data sources, not only in finance, but in a lot of industries.
Well, I think we've kind of done the existence proof in a lot of these things. I mean, you look at the rise of smartphones, I'd say that we're pretty saturated. Not saying that there are still people who are getting smartphones for the first time, but we're mostly through that. But you look at things like IoT, computer vision, especially like computer vision with like TPUs or GPUs attached. I'd say we're still pretty early innings on that. And then you couple that with, cloud infrastructure, cloud storage, cloud compute, you're starting to see like cloud GPU compute. Those two trends, I think, are still really compelling as far as the first set of things are generating more machine consumable information of new formats before than you've ever seen. And then the latter buckets are allowing you to process it with greater ease and rapidity and scale than you've ever seen. Like both of those are really, I think, tailwinds for what is AI in general. But the other thing, which I think, kind of going back to industries and how do you handle situations where there's low amounts of information? One of the very cool, not fully understood aspects of large language models is you can train them on synthetic information, right? Like you can kind of invent, data, and it still leads to like a meaningfully predictive model, which is not something that traditionally for a lot of other classes of algorithms was thought of as a good idea. So I'm talking to some founders now. We're working with founders where, for example, like we don't officially work with them, so I'll be intentionally vague as to the name, but they're looking at computer vision models to basically detect like cracks in train wheels, right? So the problem they have is they have a customer who has rail cars that come into a yard, and they take a picture of the wheel, and they want to use computer vision to determine if that wheel is cracked. Because if a wheel is cracked and it gets bad enough, it can cause a train derailment, right? And so they only have like 60 photos of cracked wheels, basically taken from trains that derailed, right? And you really, as like a model builder, do not want to wait for 10,000 trains to derail until you got the train fed,
exactly.
Right? And so what they've been able to develop is sort of the ability to like synthetically create like synthetic images of cracked wheels. And they have some feedback systems where experts can come in and be like, yeah, that looks plausible or not. But training a data set with like a bunch of real good wheels and a mix of mostly fake, but a few real like cracked wheels is leading to a surprisingly incredibly predictive computer vision system, right? And so the rise of kind of the ability for us to insert like synthetic defects, insert synthetic problem sets into data sets, I think is going to create a bunch of opportunities for like traditionally thin data set industries.
That's fascinating, and especially for those edge cases. Like, you don't want many accidents to finally figure out the data set, right?
I've always been fascinated with like space, for example. I'm not sure if you'll ever see a space company in Rackhouse, but part of what makes space innovation fascinating is exactly this data problem of like, if I want to build, like a landing pad on the moon remotely, like how am I ever going to like develop a training set for that? Maybe technology like this will help.
That's funny because that ties back to your point around research and not having any external validation for your work.
That's right, exactly. Yeah.
Something that's unique about these AI waves is that, we've seen incumbents moving faster and I guess leveraging the resources to, understand AI, at least for those that are more newcomers. You just described a few minutes ago how a lot of companies are coming to your portfolio companies and making them waste time because they're not really, serious, but there's interest, right? There's a lot of buzz around the wave. So what I'm curious is, do you think this technology is actually more powerful for existing companies that have like pre-built products, big data stores, big teams versus new startups that are, for instance, trying to build something like a Tala Financial competitor, for instance, starting from scratch today?
I think that there's been a lot of debate of like, is this a sustaining technology or a disruptive technology? And I think I netted out, in fact, Coatue put this together and they like their 2023 State of AI, where they talked about the split between, how much value accrued to sustaining versus disruptive technologies, right? And I was a very personal beneficiary of Uber, saw them build, 60 billion in value while I was there. And they kind of highlighted that like all of those Ubers and Airbnbs and all the disruptors of the smartphone era were in the order of like 400 or 500 billion. I don't remember the exact number, but like roughly that magnitude. And in that same time, all the incumbents, the Netflix and Amazon, built 7 trillion in value. I think that it'll probably be mostly a sustaining technology, but that doesn't preclude their opportunities for huge value for startups. I think when I'm like investing and thinking about new founders, there is wisdom or there is truth in this idea of saying, look, to bank a new startup right now is to make an implicit bet that the incumbent is not going to be able to solve this problem, right? And what's been, I think, unique or certainly atypical given sort of other recent trends for, they've gone through technologies like in the last, can't think of a single other trend where the dominant sort of first breakthrough product was basically an API, right? That there's sort of this idea of like ChatGPT is like really easy to integrate with. And I think part of it's the form factor, part of it's probably the reality that a lot of the sort of dominant incumbents got to their place because they disrupted somebody who was kind of a little bit asleep at the switch. But I think both of those are kind of contributing to a situation where incumbents are responding really aggressively to like early upstart startups. Founders who kind of are pitching an application and saying like, look, I'm going to do AI for tax preparation or something. And my bet is just like Intuit is not going to figure out that we should be using LLMs. Like that to me just kind of doesn't pass the sanity test. So I really do think if you're starting a new company, you need to look at who your incumbents are. And not saying that there aren't opportunities to disrupt, but it needs to be like something you really think through in an objective, like, why are they not going to just immediately run me out of town? OpenAI and all these other LLMs are kind of giving them the tools to do so.
When you talk to a founder, how does a good answer to that question looks like?
One, it's kind of one of those questions where almost like how quickly you respond is almost more important than what you say. The absolute worst answer is like it didn't occur to me to like think about this kind of thing. So the ability to say like, look, I have a thesis, right, is 80% of the answer. Right?
Yeah, like I might be wrong, but I have it top of mind.
And I can tell that you sat there and at least tried to like convince yourself of this, right? Like you're doing this kind of work, being like kind of getting in the right habits, as in being paranoid about disruption, already puts you in the top quartile of founders. What goes from top quartile to top decile to sort of guaranteed to make it is actually having the right strategy, right? But like having a strategy is most of the battle. I think that the easiest place to kind of find disruption is if you find incumbent businesses that are effectively earning contract value, earning ACV by like empowering and legitimizing maybe a role or customer that just could go away in the world of AI. So like a good example of an investment we've done, we're working with a company called InSummary that's doing generative AI to basically do work tracking. So their sort of first breakthrough product is every week you get like a AI generated roll up of all the work you did that week, really kind of built for those teams where the rhythm is like the Monday staff meeting where everybody kind of shares what they did. You get that kind of solution for free, right? And I love this because, well, one, I hate all of that sort of extra typing, but I've always believed that like everybody's job is sort of, has got like first order work, which is the work you do. And then you have like second order work, which is the work you do to talk about the work you did, kind of thing, right? And I think AI is really good at like automating that sort of second order work problem. And so part of when I was like looking at investing in this and like the team, and again, the technology was sort of solid, you think about like, why don't existing project management solutions just roll this out, right? Sort of same question. And I could be wrong in all of this, but my conclusion was, you know, all of these incumbent solutions have really been about creating technology which empowers and equips the project and program managers of the world and makes them more valuable, right? And kind of like inserts them in a more prominent, more effective part of this sort of workflow, which is about humans talking to humans, building on humans, you know, moving tickets, right? And I like that you get a kind of classic innovator's dilemma of what happens when you basically create a workflow where this job title isn't needed anymore, right? It's really hard for an incumbent to kind of make that switch. You know, again, it's early, it's pre-seed sort of seed company. InSummary is killing it. You know, whether the incumbents respond, they haven't yet, but that's how we think about it.
Totally. That makes a lot of sense. When you're talking to your portfolio founders, especially those that you funded, because you started, I think you said 2020. So those that you funded, let's say 6, 12, 18 months before the explosion of this new technology, I wonder, like, how have they changed their mind about their product? Like, have you seen them changing their product strategy? I mean, I don't know, 180 degrees. Like, what are the most interesting discussions, conversations you're having with those founders that started before this wave?
Yeah, so I mean, even before this wave, I was always pretty boring about like being customer obsessed and all of these things. I mean, like they were just good habits from Tala and Uber. So, but we have had a couple of companies. You know, we've worked with the team at Sorcero, kind of predating Rackhouse, but we've done some investments with them with the Rackhouse LPs, which is basically doing like a co-pilot for medical affairs teams for medical transcription of like how do you help the non-research scientists at you know. Johnson & Johnson and those types of companies, how do you get them the right information in language they understand so that they can go work with patients? And so they had a huge technology stack all about processing your COVID research and the new versions of this. And they had a whole elaborate system that was basically obviated overnight when ChatGPT launched, right? And for them, it was interesting because we were kind of gearing up for a fundraise that I think the business needed as far as capital into the company that maybe revenue and sort of business and the sales were kind of still growing into as far as, and they were looking at this and being like, well, I need like another 15 engineers to build, you know, version 6 of this tech stack. And like ChatGPT launched and I got a call up being like, you know what, I think we're good. I think we can wait another 6 or 8 months, right? And so I think in that very sort of tactical sense, this like manifesting this as cost savings and efficiency gains was meaningful for their sort of fundraising narrative. And again, I think they thought about the right way of they own the relationship with customers and kind of didn't really see much rotation on the sales side of things, but were able to get where they wanted to go a lot cheaper.
Is there any piece of advice that you were giving your founders regarding like data or AI that you used to give before this era? And you've probably changed your mind as GPTs came out to the market?
That's a good question. I mean, I think it's always been interesting that one of the things I talk a lot about founders, and I've talked about it with the different cycles, was that the contrarian take, and I think the best habit to be in when it comes to AI is not necessarily about being like long AI or short AI. Like lots of people are on both sides of the spectrum. Like, I actually think, to me, data, ML, AI, sort of all of these trends have been a continuous sort of sine wave of hype, right? It was sort of like when I was coming up, as I mentioned, in academia, big data, Hadoop was going to turn over the world, right? And then like that kind of didn't work, and then we realized it's hard to implement. And then like I showed up, and like my first year at Uber, I actually think like right kind of when I started was like right when they said like data scientist, sexiest job of the 21st century. Like the only time in my life I've been called sexy, right? And I was like, amazing, like I nailed it. And then like it all kind of like, okay, like now they're kind of overpaid and data isn't really delivering. And then we'd like neural nets. And then it was kind of like, well, these are too hard to explain. And so like my whole career has been living at either the crest of a wave or a trough of a wave, right? And the contrarian take in that side is not think of AI as overhyped or underhyped, but just try to like hype it the right amount at all times. And so like for me to working with founders and all of this is like, don't get too ahead of yourself when the world thinks that you are the coolest company on the planet. But also, like, don't get too discouraged when the wave goes back out, right? As an investor, it's my job to be steady and kind of deploy capital and kind of maintain a steady bar. And you as leaders need to just expect that, like, generative AI will not be cool at some point before we, like, go public. And then there will be another thing, and then it'll probably flop too. So, like, once you recognize the system and you recognize the right response is just sort of be contrarian in both directions, I think you're a better founder.
Going back to your point around efficiency, I think there's a lot of proof points that companies today with the tools that are out there in the market can require less capital than they needed before. And then you just give this example of your company. Could you put a number into it? Like, do you feel like early stage companies 2, 5, 10x, or can they be 2 to 5, 10x more capital efficient? And I guess, how does it change your own bar for, hey,
sure,
you are actually being not as capital efficient as you should in comparison to how you look at it before?
Yeah, I definitely think it's real as far as like you're seeing it. I'd feel comfortable putting 2x on it based on what I've seen now. But I will say it's very early in this. This is a very complex system where you're making multi-year forecasts based on historic trends, which are only 6 or 8 months old. So I think 2x for now. It probably gets more sooner. What I think is really interesting, and I don't really think it's shaken out, maybe other people might disagree here, is, so much of kind of early stage investing from VC, the logic of like, why do you raise, 1 on 7 is like the industry norm for pre-seed, or, 2 on 10, whatever there's always kind of a norm floating around.
Rule of thumbs.
Right. And I think it kind of ties to the community's belief of how much money you're going to need to get to product market fit. Like and so this idea of like becoming more capital efficient, if you work that forward, suggests you should need less money. And so you should see shift in valuations across sort of all of these types of companies.
But we aren't seeing them.
Yeah, right. Exactly. Well, and it's like, again, like venture takes 7 years to figure out if you're good or bad at your job. So, it'll take time to work its way through, but I'm convinced it'll happen.
Okay. I'd love to double click on that point, because the next topic that I wanted to touch on is how AI changes VC as an industry itself. So I guess like if that plays out, how do you think that influences your investment strategy and venture more generally?
Yeah, I mean, I'd like to think I'm on the right side of the history here, just kind of coming in and it being the sort of AI generalist fund. I think my belief is that VC, just talking about sort of theses, in the early nascent stages of these kind of super cycles that you're in, I think the right mode is to kind of be a very general kind of look, let's cast a really broad net. And then over time, you start to crystallize, right? Like I think about like if you look at like the Andreessen Horowitz first vision for when they launched the fund, they said like, we want to work with founders who are building software on the internet kind of thing, right? Like huge generalist theme. And then over time, you kind of saw teams form and sort of thesis cola. That to me feels like a pretty repeatable model. So I think people who are investing well right now are AI generalists. That I recognize I'm flogging my own strategy here, but I've sort of thought it through. I think that crystallizes over time. As we talked on, prices are undoubtedly going to shift. Companies will need less money to get the product market fit. And I think investors will respond. But I also think like VC funds as a whole are great candidates for automation. We do a ton of generative AI automation inside of Rackhouse.
When you say round sizes will change, does that mean you're raising a smaller pre-seed, or I guess you're just raising a pre-seed and then you're not raising a seed and an A and a B?
Yeah.
How do you think that changes, I guess, the funding model based on stages and milestones that has been the history of VC?
My belief is you're going to need less money overall to get to product market fit. That definition has also changed, but call it $1 million in ARR, rough plus or minus. And so there's two schools of thought. One is you're going to have this ecosystem of angels and pre-seeds and seed funds and seed plus funds. And like, it's sliced pretty thin that you probably go to like 4 or 5 different kind of classes of investors before you get to product market fit now. You could see one world where all 5 of those slices still continue to exist and just all the rounds are like, the valuations are lower or something. My belief is all kind of collapses downwards, that you're going to kind of go back to like having either like a pre-seed or seed fund. They'll do like one fundraise of like $2 million-ish bucks. Rackhouse, we have a goal of getting to 10% ownership. That number is really thought out as far as big enough we can do price rounds, but not so large that you can't include angels or sort of strategic small check funds. That model is again kind of thinking through a world where we're going to need less capital to get to product market fit. I hope that's kind of the model that we get into as well. Somebody needs to stand up and price the round and kind of sit on the board or serve that kind of governance purpose. But angels and sort of small strategics also play a really important role operationally. So I think if we're giving founders what they want, you end up with that model.
That's interesting. So you think that the seed world will probably concentrate into fewer players?
Yeah, I think so.
But it will keep functioning similar to how it is. The more disruption will happen in the later rounds, like, and I guess A and above.
Yeah, I think so. I just think that the amount of marginal effort to scale from 1 million in ARR to 10 million or 10 to 50 in terms of like integer number of people is going to be significantly lessened, right? The market is telling us this. Klarna has, didn't need 700 people, right? Kind of thing and ServiceNow, started talking about these sort of product growth offerings as well. So I think that the ability to create leverage through technology is going to be easier than ever before. We always even aspired to do this at Uber. I remember there was a long period where Travis announced that we were going to run every Uber market with 3 human beings, right? There was going to be 1 GM, 1 driver operations person, 1 community manager, the former to deal with our driver partners, the latter to deal with users, and technology was going to cover the rest. It was like a good product thought experiment of how do you run New York City with 3 human beings? We never got there. Obviously, you can look at how many people are there in Uber and payroll. But I think that that's still the right mental model. And I think LLMs kind of get to that world of what would it be like to run an Uber market with 3 people and a ChatGPT subscription or something, right? Pretty achievable.
Yeah, in a sense, it's funny because it's like, I guess the concept of venture is, okay, for the seed phase, let's be as small a team as possible to get to product market fit. And afterwards, to scale, we need thousands of people, right?
Right.
So it's like 2 extremes.
Totally. And there is definitely, I'm not saying it's truly going to be teams of 3 people in that, one, the skills necessary and the level of sophistication necessary goes up over time. And AI can help with this, but there is no amount of AI, I think, that we're going to hit in the near future that's going to turn like a back-end software developer into a head of marketing. There's just different skill sets necessary. But I do think it's going to be significantly lessened.
Talking about this, I guess, seismic change and how it can change VC itself. I know before Rackhouse, you were advising multiple firms. So if you had, I guess, you'd be able to talk to the other firms and be closer to them. How are they thinking about this new world? In what say would you say VC firms are least prepared for this technology shift?
Yeah, I would say that there's been an effort to bring technologists onto the staff at VC firms. It's still early innings, and I think even Rackhouse is probably only 18 months into building what I want to build, and I've demoed it to a few of our LPs, and my mindset is very much like oh my God, I kind of hate this, and this is about 10% as good as like any internal tool I ever had at an operating company. And I will still say most VCs are like, oh my God, like I cannot believe how automated you've been, kind of like you are so ahead of the curve. So I think the status quo is pretty light. And I think it's rightfully so, as far as like, this is an industry which has been about
network, brand.
Excel workbooks, AGMs in person, like these are not sort of very technology friendly scalable patterns. LLMs are helping with that. And I think, the idea of send somebody a pitch deck and then you can actually like take a pitch deck and extract structured information from it from LLMs is like a good example of, legacy to modern kind of interfacing. But it's early. I think you're going to sort of need to see the best firms are bringing on these like heads of data scientists, sort of technology hires, but there aren't nearly enough.
Do you feel new tools, technology stacks will actually change, let's call them the competitive dimensions VC firms needs to dominate to win in the market? I mean, to win the best deals and eventually have the best returns?
I think so. I'm not really convinced it's going to completely like reinvent the world order. As far as I was talking with a couple friends who were building on this technology, and like the best way to think about like AI automation in my mind is it helps you like rigorously do the things you always wanted to do and only kind of do some of the time, right? So like a good example of this is the best investors on the planet, the best bosses on the planet remember everybody's birthday, right? And you get a card in the mail or a thoughtful gift, right? And of course, like you talk to any manager and like, of course I would love to do that. And like 10% do because we get busy and real life happens, et cetera. And so there are like light process automations where it's like, look up everybody's birthday, put some thought around like what gift we should give them and just automatically mail it to them on the birthday, right? Like those kind of flows. And so tying this back to investments, I think that there are a lot of investors out there that are doing the hard things well as far as they're thinking to do them, but don't have the superhuman discipline to do them consistently well all the time, forever and in perpetuity. And AI is going to be that superpower, right? But I don't think it's going to turn mediocre investors or people who don't have the discipline to do those habits well and like give it to them. Like I just don't see that happening.
So in a sense, it will be a sustaining technology.
Potentially. I mean, what I'd like to think is it accelerates competition from there. There are like because the other thing which is just fundamentally true about venture, especially where your budget is like a function of, it's a percentage of your assets under management, is there are lots of successful firms who have gotten to be successful by doing the right things, but now just can like weaponize their budget to kind of like defend their perch.
I mean, like platforms like Andreessen that they can offer things that a small firm can't.
Yeah, I learned a long time ago to not name other funds by name and whenever I'm on podcasts, but sure, we can go with that. But what I do think is you're going to have folks who have smaller AUM
able to compete with those huge.
Right. On a kind of, mano-a-mano basis are doing the right things in the right way. And you're going to level that playing field.
That's fascinating. That's super interesting. Yeah. That's a very good take. Just one more question, and then I have a few closing questions. How have you evolved as an investor? Like something that's, I think, unique about this new era in comparison to when you started, is like all the things you did at Uber in terms of AI, data science were pretty nascent, new to the industry, and there was only a few people. Today, we're in a paradigm where there's probably more people in the data science, AI, but you have also this influx of people that are not coming from this necessarily from this domain expertise, wanting to play with these tools, with AI, with data. So I guess, how have you evolved as an investor, and how has this, I guess, paradigm shift changed your philosophy around what you look for in a founder, in a company?
Yeah, no, I think that, it was very interesting in that, when I started angel investing, money was free and AI was kind of unpopular, right? And now both of those have sort of fundamentally flipped, right? And so I was sort of very much in this attitude of like, one, kind of cheerleading and trying to be this investor who is articulating this value proposition maybe to my fellow VCs or sourcing deals. I was angel investing. I was like connecting founders to funds and trying to be like look, you don't see this yet, but it's going to be huge kind of thing, right? You can put $5 million in this company and like we both know you can kind of afford it. And I'd say these days, where I think we're undeniably in in an AI hype cycle, it's a little bit of the like more of the conversation with founders is look, you could raise $5 million at 50 posts for like your half completed Notion page and you and your co-founder, but like you don't want to do that because this is a long journey and you're not setting yourself up for success. So I'm very much kind of preaching the opposite gospel. And by the way, getting $5 million from like mere mortal funds is going to be tough to do, unless you're signing up for an impossible set of expectations. So I think I've always been a contrarian. This is the direction sort of shifted. But yeah, that's what definitely comes to mind.
So it's not that you're inconsistent, you're just consistently contrarian.
I'm just always a curmudgeon about this kind of thing. Yeah.
Okay. So let's go to the closing questions. I'll make a short question and give me your immediate thoughts. When you think about AI, what's something that you think people are trying to disrupt, but actually you think will never change?
I think a really common failure case is when you try to teach an AI model how to consistently make a good decision that you yourself don't know how to make consistently well. Some of this is like, you're seeing this kind of playing out with like the politics of like Gemini versus Grok and stuff. Is it better to be a conservative or a liberal kind of thing? We could debate this till the cows come home. AI is not going to help us, right?
Yeah. Humans can't.
Right. What you want to do is you want questions which are like answerable by humans or adjacent questions which could be answerable by human. Teach AI how to use those and let them augment our discovery process.
Okay. That's a good one. What's the best investment advice you've ever received?
I would say undeniably true that optimizing for building the right cap table as far as the people you want to work with, especially early on, is so much better than optimizing for all the unit economics, going both ways. Like I've been in deals where I was grumpy about how high the price was, but was with a cap table, people I respected, and I could kind of see how we were sort of this community that really was like really good at supporting founders, and vice versa. I've worked with founders who maybe took prices or unit economics more dilution than they would have preferred to take, but were able to build that right set of people. So like early on, optimize for people always, and if it works, the unit economics will sort themselves out.
I totally agree with that. I think the most impactful books often change your behavior. What's a recent book that upon reading it, or can also be a blog, a podcast, anything, that upon consuming it, altered something you do or inspire you to do, adopt a new strategy, a new plan, a new action?
I'm rereading The Guns of August right now by Barbara Tuchman, which is about the state of Europe as it went into World War I. And I think it's very prescient, very relevant to what's going on now as far as kind of talks about, and just there was sort of this idea of like, as a continent, everybody was kind of convinced that large scale, long lived war was like impossible. And it led to a bunch of sort of fallacious, ultimately very destructive conclusions. So I think that these kind of like group delusions as they intersect geopolitics can be very, very problematic and scary for the people involved. You're saying a little bit about how I feel about the current state of geopolitics in that answer, but it's a good read.
Kevin, this was amazing. Thank you so much for making it, for taking the time.
Of course. Thank you for hosting. This was, I'm glad to do it.
Awesome. Thanks. Bye. That's all.
Bye now.